Your first trade of the day is perfect. You analyze the setup, you check your criteria, you enter with precision. The trade wins. You feel great. Your trading psychology is calm and focused. You're making good decisions. Your second trade comes 30 minutes later. Same process. Check criteria. Good setup. You enter. This trade also wins. You're 2 for 2. You're on a roll. Your third trade comes an hour after that. You analyze it. It's a solid setup. You enter. Winner again. 3 for 3. You're feeling invincible. Your trading is flawless. But then something shifts. Your fourth trade comes. You analyze it. It's decent, but not perfect. In the morning, when your mind was fresh, you probably would have skipped this setup. But now, after 3 trades and 3 wins, you enter anyway. This trade loses. Your fifth trade is worse. You barely analyze it. You just see price moving and you enter. This trade also loses. Now you're confused. What happened? You were doing so well. Your sixth trade is a disaster. You're not really analyzing anymore. You're just reacting. You take a trade that clearly doesn't meet your criteria. It loses even worse. You're frustrated now. You're making emotional decisions. Your seventh and eighth trades are pure panic trades. You're desperate to recover your losses. Your analysis is almost non-existent. You're just clicking trades, hoping something works. Both lose. By your ninth trade, you realize something is wrong, but you're not sure what. Your trading strategy hasn't changed. The markets haven't changed. Your charts look the same. But your decision-making has deteriorated dramatically from trade 1 to trade 9. This is decision fatigue in trading psychology, and it's destroying more trading accounts than most traders realize. Let me tell you about Yale, who discovered that his worst trades happened consistently in the afternoon, and what he learned about decision fatigue changed everything. Yale's afternoon disaster pattern. Yale had been tracking his trading results by time of day when he noticed something bizarre. His morning trades had a 68% win rate. His afternoon trades had a 34% win rate, exactly half the win rate for the same strategy, same market, same analysis approach. The only difference was time of day. Morning trades were winning. Afternoon trades were losing. This made no sense to Yale based on market conditions. The markets weren't less tradable in the afternoon. His strategy wasn't different. So why was his performance cutting in half? Yale started studying his afternoon trades more closely, and he discovered something shocking. His afternoon trades were significantly lower quality than his morning trades. In the morning, Yale would analyze a setup thoroughly. He'd check multiple time frames. He'd verify his 3 entry criteria were all met. He'd calculate his risk-reward ratio. He'd only enter when all factors aligned. In the afternoon, Yale's analysis was rushed. He'd see price moving and enter in seconds. He'd skip his normal checklist. He'd take setups that didn't quite meet his criteria. He'd take higher risk trades. His discipline deteriorated noticeably. Yale realized his afternoon performance wasn't about trading psychology in the traditional sense. It wasn't about fear or greed or emotional impulses. It was about something more fundamental. His brain was tired. Yale had been making trading decisions all morning. Every trade required analysis. Every trade required decision-making. By afternoon, Yale's brain was exhausted. His decision-making ability had degraded. His discipline had collapsed because discipline requires mental energy. Yale calculated the cost of this decision fatigue. In a typical month, Yale took about 40 trades, 20 in the morning, 20 in the afternoon. The 20 morning trades made him $2,800 with a 68% win rate. The 20 afternoon trades lost him $1,600 with a 34% win rate. His decision fatigue cost him $4,400 per month. That's $52,800 a year just because his brain got tired as the day went on.
The trading psychology of decision fatigue. Yale's discovery about his afternoon performance led him to research decision fatigue, and understanding the psychology revealed why trading is so vulnerable to this problem. Decision fatigue is a real psychological phenomenon. Your brain has a limited supply of mental energy. Every decision you make uses up some of that energy. Once your supply is depleted, your decision-making ability deteriorates dramatically. This isn't about being lazy or lacking discipline. This is about brain biology. Your prefrontal cortex, the part of your brain responsible for rational decision-making, uses glucose and other resources. Every decision depletes these resources. When resources run low, decision quality drops. In trading, this is catastrophic because trading requires constant, high-quality decisions. Entry decisions, exit decisions, risk management decisions, trade size decisions. Every decision requires mental resources. By afternoon, Yale had made dozens of trading decisions. His prefrontal cortex resources were depleted. His rational decision-making ability was compromised. So his afternoon trades suffered. The trading psychology of decision fatigue also involves willpower depletion. Every time you resist an impulse, skip a FOMO trade, wait for a proper setup, stick to your position size, you use willpower. Willpower is a limited resource that depletes throughout the day. Yale's morning self had lots of willpower. He could easily skip a mediocre setup. He could wait patiently for perfect setups. His afternoon self had little willpower left, so he'd take mediocre setups. He couldn't resist impulses. Another aspect of decision fatigue in trading psychology is that decision-making becomes more impulsive and reactive. When your brain is fresh, you take time to analyze. When your brain is tired, you take shortcuts. You make snap judgments based on partial information. You rely on gut feeling instead of analysis. Yale experienced this constantly. Morning trades were deliberate and analytical. Afternoon trades were impulsive and reactive. Same strategy, same trader, same market. But decision fatigue made one version of Yale's brain use completely different decision processes than the other. The hidden cost of decision fatigue. Yale's realization about his decision fatigue cost, $52,800 annually, pushed him to understand the full financial impact of this phenomenon, beyond just the obvious losing trades. Cost 1. Direct losses. The most obvious cost. Afternoon trades with 34% win rate versus morning trades with 68% win rate. That 20-point difference in win rate multiplied by Yale's average trade size and frequency cost him $4,400 per month in direct losses. But this was only the beginning of decision fatigue's cost. Cost 2. Larger losing trades. Yale noticed that his afternoon losing trades were larger losses than his morning losing trades. When fatigued, Yale would resist exiting losing trades properly. He'd move his stop loss. He'd hold longer, hoping to recover. His management of losing trades deteriorated with fatigue. So his afternoon losses were worse than they should have been. A trade that should have lost $100 would lose $250 because decision-fatigued Yale mismanaged it. Cost 3. Larger position sizes. Ironically, fatigued Yale also took larger position sizes. This makes no sense. You'd expect fatigue to make you more cautious. But fatigue actually increases risk-taking. When decision-making is compromised, people tend to take more risk rather than less. Yale's afternoon position sizes were about 30% larger than his morning position sizes. This amplified both his wins and his losses, but since his afternoon trades lost more often, the larger size made losses worse. Cost 4. Reduced profit-taking. Yale also struggled with taking profits in the afternoon. When markets moved in his favor, fatigued Yale wouldn't exit at his planned profit target. He'd hold, hoping for even more profit. Sometimes he'd get it. Usually, the trade would reverse and his profit would disappear. Morning Yale would take his profits at the plan. Afternoon Yale would chase more and often end up with losses instead of profits. Cost 5. Broken trading rules. Decision fatigue made Yale break his trading rules more frequently in the afternoon. He'd enter without checking all criteria. He'd trade outside his optimal hours. He'd risk more than planned. Each rule break was a decision fatigue symptom and cost money. Cost 6. Mental health impact. Beyond the financial cost, decision fatigue made trading increasingly stressful in the afternoon. As quality deteriorated, Yale felt more frustrated. Frustration led to more poor decisions. By end of day, Yale was emotionally exhausted and financially depleted.
How Yale outsmarted decision fatigue. After discovering his decision fatigue pattern cost him $52,800 annually, Yale developed a system to outsmart decision fatigue. And his solution was elegantly simple. Solution 1. Stop trading in the afternoon. Yale's most direct solution: don't trade when fatigued. Yale committed to trading only from 9 a.m. to 12 p.m. Afternoon, his platform closed. He didn't trade regardless of how good a setup looked. This eliminated 80% of his decision fatigue problem immediately. No afternoon trades meant no afternoon fatigue losses. No afternoon equals no afternoon decision fatigue cost. By simply removing afternoon trading entirely, Yale cut his decision fatigue losses from $52,800 annually to about $10,000. Occasional morning fatigue on slower days. Solution 2. Pre-decided decisions. For the decisions Yale did make, he pre-decided them in advance when his brain was fresh. On Sunday evening, Yale would decide in advance which markets to trade, which specific setup types to trade, his exact position size, his exact risk parameters, his exact hours to trade. By pre-deciding these things when fresh, Yale removed the need to make these decisions during trading when fatigued. This reduced his decision load during trading from 20 decisions per trade to just 1. Does this setup meet my pre-decided criteria, yes or no? Solution 3. Automated trading rules. Yale built as much automation as his platform allowed. Position sizing was automatically calculated, stop losses were automatically placed at his preset distance, alerts were automatically triggered when criteria were met. Automation eliminated decisions. Fewer decisions meant less fatigue. Less fatigue meant better decision-making on the remaining decisions that required human judgment. Solution 4. Decision hierarchy. Yale created a hierarchy of decisions by importance. First-tier decisions were critical and required fresh thinking. Second-tier decisions were important but could use pre-decided parameters. Third-tier decisions were routine and could be automated or delegated. By front-loading critical decisions when his brain was fresh and automating routine decisions, Yale ensured his mental resources went toward the most important trading decisions. Solution 5. Rest periods. Yale built mandatory rest into his trading day. After every 3 trades, Yale took a 15-minute break. No charts during the break. He'd walk, stretch, meditate, or rest his eyes. These breaks partially recharged his mental energy. 3 trades of quality decision-making, break. 3 more trades of quality decision-making. This prevented the gradual deterioration that came from constant decisions without rest. Within 2 weeks of implementing these 5 solutions, Yale's afternoon win rate jumped from 34% to 62%. Not as high as his morning 68%, but dramatically better. His monthly loss from decision fatigue dropped from $4,400 to $800.
The transformation. Yale's success in outsmarting decision fatigue didn't just improve his afternoon trading, it created unexpected benefits that transformed his entire trading experience. Benefit 1. Account growth. The most obvious benefit, Yale's account grew consistently. By eliminating decision fatigue losses, his profitable trades weren't being wiped out by fatigued afternoon trading. His monthly results improved by $3,600 on average. Benefit 2. Mental energy preservation. By limiting trading to specific hours and pre-deciding most decisions, Yale's brain wasn't constantly depleted. He had mental energy left for other activities. He wasn't a zombie by end of trading day. Benefit 3. Better life balance. By stopping trading at noon, Yale had his entire afternoons free. No more afternoon trading meant afternoon was truly free. Yale could exercise, spend time with family, work on other projects. Trading stopped consuming his entire day. Benefit 4. Consistency. Yale's trading became consistent. Every trading session looked similar. Every trade had similar quality. His win rate stopped varying wildly. His results became predictable because decision fatigue was no longer sabotaging his afternoon performance. Benefit 5. Reduced stress. Knowing he wasn't trading during fatigue periods meant Yale could relax in the afternoons. No temptation to trade when fatigued because he'd simply closed his platform. No anxiety about making bad decisions because he wasn't making afternoon decisions at all. Your path to outsmarting decision fatigue. Yale's journey from $52,800 annually lost to decision fatigue to consistent profitable trading offers you clear steps to implement immediately. Step 1. Track your decision quality by time. For the next 2 weeks, note what time each trade occurred and whether it was a winner or a loser. Calculate your win rate by time of day. Most traders discover a clear pattern. Earlier trades win more, later trades win less. This data proves that decision fatigue is real and quantifies its cost. Step 2. Identify your fatigue point. When does your decision-making deteriorate? For Yale, it was after noon. For you, it might be after 5 trades or after 4 hours. Identify the specific point where your trading quality drops. Step 3. Set trading hour limits. Commit to trading only during hours when your decision-making is fresh. Close your platform after your fatigue point hits. Make it a hard rule. For Yale, this meant 9 a.m. to 12 p.m. only. For you, it might be different, but the principle is the same. Trade during fresh hours only. Step 4. Pre-decide your trading parameters. On Sunday evening or before each trading day, decide in advance which markets, which setup types, position size, risk parameters, trading hours. Write these down. When you're trading, you're just executing these pre-decided parameters, not making new decisions. Step 5. Automate what you can. Use your platform's features to automate position sizing, stop-loss placement, and alerts. Reduce the number of decisions you have to make during trading. Step 6. Build rest periods. After every 3 trades, take a 15-minute break. Step away from charts. Let your mind rest. This partially recharges your decision-making resources.
The bottom line is decision fatigue sabotages your trades, not because you're undisciplined, but because your brain has limited mental resources. Every trading decision depletes these resources. Once depleted, your decision quality deteriorates dramatically. Yale's afternoon trades had a 34% win rate versus his morning 68% win rate. Same strategy, same market, same trader. The only difference was decision fatigue. This cost Yale $52,800 annually. But decision fatigue is outsmartable. Stop trading during fatigued hours. Pre-decide your parameters when fresh. Automate routine decisions. Build rest periods. Use decision hierarchies. These strategies don't require more willpower or discipline. They require reducing the number of decisions you make during trading. Fewer decisions means less fatigue. Less fatigue means better decision quality. Yale's monthly decision fatigue cost dropped from $4,400 to $800 just by stopping afternoon trading. His trading became consistent. His account grew. His life improved because he wasn't drained by constant trading decisions. You can do the same. Track your win rate by time. Identify your fatigue point. Stop trading during fatigue. Pre-decide your parameters. Automate what you can. Build rest periods. Decision fatigue is real. It's costing you money. But you now know how to outsmart it. The question is, will you implement it? Will you stop trading during fatigued hours? Will you pre-decide your parameters? Will you give your brain the rest it needs to make quality trading decisions? Your trading results depend on your answer.